For this video, we want to cover how to prepare a simple 2022 Form 1 full-time resident tax return for Wisconsin. So we've got a sample Wisconsin Form 1 here for our taxpayer, Adam Q. Taxpayer. But in addition to this, we do have the full 1040 for Adam. And this is necessary because you have to complete your 1040 in order to even begin starting your Wisconsin tax return. So we'll go over both of these pieces in more detail later. And then we do have the Form 1 instructions here for the year. And these are certainly helpful in order to prepare the return, but they also contain a lot of tables that we'll need to reference in order to calculate certain credits and then ultimately the tax based on the tax rate tables. So in addition to these pieces here, we do have one slide covering some background on the taxpayer here and then some notes that we should be mindful of. And then we'll cover this slide in full, and then we'll jump into the returns and look at how those are prepared as well. So let's start with a fact pattern for this taxpayer. So we have Adam Q. Taxpayer. He's a single filing taxpayer, so he's not married, he's not head of household, and he's a full-time resident of Milwaukee. He works as a consultant, and he has W-2 income on his wages of $84,000, so that can be found in Box 1 in Form W-2. And that number was reduced by his pre-tax contribution to his 401k plan. That is an employer-sponsored retirement plan. In addition to his wages, Adam has a U.S. bank account, a savings account that paid interest of $100. His U.S. brokerage account paid out qualified dividend income of $250, and he has some short-term capital losses of $766, and then some long-term gains of $1,700. Now, in addition to those investments, Adam has an investment in a Florida municipal bond, and that paid him interest of $47 during the year. And then he separately has some U.S. Treasury investments, so U.S. Treasury bonds that paid interest is $75. Now, Adam is also covered by a high deductible insurance plan at work, and so that made him eligible for HSA contributions. So we put $1,000 into an HSA, so he took that deduction at the federal level, and then we're going to see how that is impacting his Wisconsin return. And then lastly here, Adam does not own a house in Wisconsin, he rents. So he rents a house, he pays $1,250 a month, and he has no itemized deduction, so he's going to be claiming the standard, right? So standard deduction at the federal level and standard deduction at the state level. Now, just some notes here to highlight for Wisconsin. So Wisconsin follows this federal tax treatment for HSA deductions, right? And that's in contrast to some states which don't allow you to deduct the contributions to your HSA, so you have to have that added back. Wisconsin follows the same treatment, so no issues there. Municipal bond interest, so he's got that $47 of Florida municipal bond interest, which will be taxable in Wisconsin. And capital gains and dividends, all taxes ordinary income, so there's no distinction between qualified versus non-qualified dividends, short-term, long-term capital gains. However, there is in Wisconsin a deduction for a percentage of your net long-term capital gain income. So in other words, they don't say, well, long-term capital gains are just subject to a lower tax rate. They actually give you a deduction for your net long-term capital gain income. And so we'll see that on Adam's return here. And that adjustment will be reported on Schedule SB. And then lastly, Wisconsin has a lot of credits available to its residents. Two of the more popular ones are this homestead credit for low-income renters and homeowners. However, his income is too high for that credit, so he won't get that credit as a renter, but he can claim this school property tax credit for a certain amount of rent he paid in his apartment. And so we'll be able to claim that, and we'll see how that all works out. So let's jump back to the returns, and we'll start getting into the details here. So firstly, I want to go over the 1040 very quickly. I won't spend more time on Wisconsin, but we can see here box 1 of his W-2 wages, $84,000. And then we see the investment income here, the taxable interest, the qualified dividend income of $250, and there's that Florida municipal bond interest of $47, which is going to be exempt from federal tax, but subject to Wisconsin taxes. All right. The capital gain income, we can see that reported on Schedule D. So we have the short-term capital losses of $766. We have the long-term capital gains of $1,700. And all of that will flow through to Wisconsin as well. Now, the 8889 is the HSA reporting. So he has self-holding coverage, right? He's a single filer, and he's not married, no dependents. And he did put $1,000 into that HSA. So he got an HSA deduction at the federal level for $1,000, which is reported up on Schedule 1 in Part 2. So we do have a reduction for that health savings account contribution. Now, on to the Wisconsin return, right? So Wisconsin return, starting at the top here, just information on the taxpayer, himself or herself. We have Adam Taxpayer, the Social Security number, filing status should just be consistent with the federal filing status, unless you have a distinction like with the head of household, right? So Wisconsin differs a little bit, or differs rather, from the federal treatment. It's possible to have head of household as not married, head of household as married in Wisconsin, versus federal doesn't look at it that way. But in our case, pretty straightforward. Just single filing status, the same as what you have for the federal level, and then input information on where you're living in your tax district. And so the school district number codes, those can be found in the form instructions. Now, line 1, our starting point for the return is, again, our federal AGI. So we're looking at our 1040, and we scroll down to line 11, we can see our adjusted gross income for federal purposes is $84,359. So if we look at our Wisconsin return, line 1, $84,359, and then we will have adjustments to get to what is considered our Wisconsin taxable income. Now, line 2, adjustments to federal AGI from Schedule I. So Schedule I is a separate Wisconsin schedule that has other kind of unique adjustments between what is appropriate for federal purposes versus Wisconsin. In our case, we don't have anything, right? Adam here doesn't have a lot of unique variances, right? We just have the municipal bond interest, we have the U.S. Treasury interest, and so we'll see how that all works out. So if we look at total additions to income and then total subtractions to income, we'll need to look at Schedule AD and Schedule SB. So if we jump to Schedule AD, these are the additions to income. So line 1, the first one is state and municipal bond interest. So $47 is an add back because, again, that's Florida municipal bond interest, which is exempt from federal tax purposes, but it can be taxed by Wisconsin because it's not Wisconsin source. So we have an addition to income for $47 there. And then for Schedule SB, where we have subtractions, we have our U.S. government interest. So this is the Treasury interest, which is taxable at the federal level, but not taxable at the state level. So we had $75 of U.S. Treasury interest. If we look at the 1040 Schedule B, we can see that reported here. U.S. Treasury bond interest, which is $75, is taxable at the federal level, is not taxable by the state. The state is not legally allowed to tax it. So you can have a subtraction from your federal AGI for that amount. Now, the capital gain loss subtraction, this is attributed to that long-term capital gain income. So if we look at our Wisconsin Schedule WD for capital gains and losses, we can see these are consistent with what was reported on Schedule D for our 1040. So we have $766 in net losses for short-term, $1,700 in long-term gains. If we scroll down to Part 3 here, where we can see the deduction is being calculated, our net amount of gain is the long-term capital gain minus those short-term losses, so $934. And we take 30% of that figure, and that is the amount that we can deduct. So when we look at Schedule SB, we have a $280 subtraction for capital gain losses. And so the total amount of subtraction that we're going to be able to carry forward is that $355, right? So the $355 is going to be reported up here on Form 1 of Wisconsin, the individual tax return. So we have our addition there. $47 is in addition to federal AGI. Then we have a $355 subtraction. So our Wisconsin income after the additions and subtraction adjustments on line 7 is $84,051. Now, standard deduction. The standard deduction in this case can be calculated simply by using the tables in the instructions. So for federal tax purposes, just for comparison, the standard deduction is kind of a fixed amount simply based on your filing status. So if you're a single filer for 2022, you got $12,950. If you're married, you got a different amount. Head of household, different amount. With Wisconsin taxes, it's not just dependent on your filing status, it's also dependent on your income. So we have to look up in the table the Wisconsin income, and then we find our standard deduction. So if I go to the form instructions here and we look at the standard deduction computation, this is the standard deduction table. What we look at is our Wisconsin income is $84,051. So then we need to find the $84,051 to figure out what our standard deduction is. So we look at the table here, we scroll down, we see, okay, here's the range, $84,000 to $84,500. So our standard deduction is for a single filer going to be $3,719. So 3719 there is then reported up on the standard deduction line 8. And then we subtract the standard from our Wisconsin income and we get $80,332. Now this number is further reduced by however many exemptions we can claim in the state. So the exemptions allow for a single filing taxpayer just going to be 1. Right? If you're married, you'll get 2. If you have other dependents, you're eligible to claim them as an exemption as well. In this case, we only have 1 exemption available, so we get a $700 deduction. So we subtract those 2 amounts, and our net amount here, before we go look at the tax table, is $79,632. So this figure is effectively our Wisconsin taxable income. So $79,632. If we go back to the Wisconsin instructions, and now we're going to look at the tax rate tables. So the tax rate tables in here, our income is $79,632. So we're going to find $79,632 in the table here. So it's this section. So $79,600 to $79,700, and our tax based on our single or head of household is this first column. So $3,914 is the tax that we owe based on our Wisconsin taxable income. So I can go back to line 12, put in the $3,914, and so that's the tax we owe, right? Great. Now, once that's done, now we start to dive into what kind of credits are we eligible for, what kind of withholding tax that we have applied. And so how do we get credits for that? That was already taken out of our paycheck. So again, the homestead credit's not going to be available to us because our income is too high. But we do have the school property tax credit. And so the amount of rent that Adam paid during the year, remember, is that $1,250 a month, so $15,000 for the year. The credit based on that amount of rent is going to be $300. And that's because $300 is the cap. So if we look at the Form 1 instructions and we go to the section on the renter's school property tax credit table, you can see here you find where your rent is throughout the year. So what's the yearly total? And then you can find the amount of credit that's going to be available, whether heat was included in the rent or you had to separately pay for your own heat. In this case, Adam separately paid for the heat, so his rent being at $15,000 falls right here, right? $12,500 or more. So you can see that the amount of credit is capped out at $300. If your rent for the year is somewhere within this range, then you won't get a $300 credit. You'll have a more reduced amount, and so that would be the amount that you report on your Wisconsin Form 1. Now, what's also important to remember before you input these amounts here is you need to complete the rent certificate and have this provided to your landlord and have them sign it and complete other elements. Now, you can submit this if they don't sign it, but it's always advisable to do so, because if you don't have your landlord certify these amounts and provide this information, then you have to provide more information as far as canceled check copies and things like that to verify that you paid the rent. So the rent certificate, we'll see here the renter is just you as the taxpayer at the time you lived at the property, and then the landlord of the property. So if we had John Smith was renting this property to the taxpayer, or Adam Taxpayer here, John Smith is the landlord, but complete the rest of these fields here. So some of these are quite important, right? Is this a long-term care facility, nursing home? No, this is just a single-family home. The rental property is subject to property taxes, so it doesn't fall within these exempt zones. And then they certify, okay, well, how much rent was collected during the year? What was the monthly amount paid? And so the total 2022 rents were, in this case, $15,000. And then again, if we look at that table, we can see that based on the table amount, the total amount of credit available is just going to be $300. So the tax that Adam owes here, $39.14, he can reduce that by the $300 amount. So the net amount of tax that he's going to owe is $3,614. Now this is also really important here, line 22. So if you had any out-of-state purchases where there wasn't sales or use tax collected and paid to Wisconsin, then you are actually obliged to pay that separately yourself. In this case, Adam didn't have any of those purchases that didn't have the tax collected, so he can indicate no, that he didn't have any sales or use tax due. And then we move down here. So the Wisconsin taxes withheld that he saw on his W-2. So remember, on his W-2, you can see the federal income tax withheld, and you could see the state income tax withheld. He had $5,000 withheld in state income taxes on his W-2, and so he's claimed the $5,000 credit there. And so when he moves on down to this last page, he can see that, okay, well, the $5,000 I had paid in, the actual amount of tax I owe is $36.14. So he gets a Wisconsin state tax refund of $1,386. And so Adams elected to simply have this refunded to him via paper check. And so he'll get that $1,386 as a check in the mail, and he can sign and date and send this into the Wisconsin tax authorities. So that covers it for this tutorial. I hope that was helpful. If you have any questions, obviously feel free to leave me a comment below. Happy to answer as many as I can. And I look forward to seeing you again on the next video. Thank you.